Hello and welcome to this week's edition of Murphy's Market Minute. It is the 3rd of April with Elliot and
Nathaniel Vossman.
Whoop, whoop. Yeah. All right. Who's seen the headlines? What are the headlines? Stocks see worst wipeout since 2020. It was a rough day.
Yeah, it was.
Right?
Across the board, yeah.
Now, again, we kind of hit on this once before. This headline from Yahoo Finance, updated at 3:41 CDT. Is that COVID time?
Something like that. Should be after the market's closed, though.
Gotcha. I think so. Stock market today, Dow plunges 1,700 points. NASDAQ, S&P 500 pummeled in biggest rout since 2020. So I think the DJ index, the Dow Jones 30, is down 3.98 today. The SPY 4.93, something like that, right? 4.84 for the SP.
Yep.
3.98 for the Dow, 5.97 for the NASDAQ, 6.59 for the Russell 2000. Crude oil's down 7, gold's down almost 1, silver's down almost 8. All right. So, yeah, right now, just to kind of put things in perspective too, right? Like, I hate it when, Jimmy Fallon made a joke about bringing, the wealth is going to, come back from having been gone. Like, it's not gone. It gets moved. It gets moved from equities or bonds to cash. Like, it doesn't, evaporate and disappear. That's one thing I always find kind of interesting. So money's moved. It's moving to, VIX. I think the VIX, the fear index, jumped 25 points today.
Yeah.
All right. And so when there's moments of uncertainty, the market is going to take some corrective measures. We're now down for the year to date, the SP 500, 8.25. We're down in the Dow year to date, 4.7. And in the NASDAQ year to date, we're down 14.29. Now, if we go to our high, we're higher than that, right? What are we down off the high of the SP 500 for the year?
I think it was just under 12 points.
Not for the year, but
yeah, for all time. So I think it probably was back in December. I'd have to look what month, but yeah, we're down about 12.2%.
Yeah,
from the peak.
Yeah, right. And then we were kind of kidding around, cherry picking some data, and you came up with, I thought, a pretty wild date. Yeah. Was it June 6th, August 6th?
August 6th. Was it NASDAQ or
August 6th? I think it's everything. I think that was a low point for everything.
Probably.
Yeah, it definitely was. It was August 6th. The SP 500 was at 5199.
Yeah, so we're higher than then.
We're
making progress. We're going up.
Than August 6th.
Look at the
macro. Right. The NASDAQ August 6th was 16,200, and today at 16,550.
Wow.
Yeah. Now, obviously, we're completely cherry picking. Okay. There was a rout over a couple weeks back there that dropped the market down pretty low. Yeah, but it recovered and then dropped again, and then it's recovered. And
I was going to say, this time, a few months from now, a year from now, it's going to be the same blip looking back on this.
Yeah, it definitely will be. But, we've said for a while, once the market starts to get where it's down around 10%, and so obviously there's those two ways to look at it, whether you're looking at year to date or you're looking at it from its high. That's what, if you're a very conservative investor, I'd be open to consider, taking some protective measures in your account, maybe raising 25, 30% of it into cash, just in case it continues to go for lower, right? And then there was one other thing along those lines.
Just about the different buckets of money. I mean, that's kind of something we discussed earlier.
Yeah. We actually shot this twice today.
Yep.
So we messed up the saving of the video. But yeah, and there's another thing to keep in mind. What it was is basically that even though I'm open to it at this point, because we're approaching that 10% drop year to date, I really do feel comfortable waiting till tomorrow to see what the market does tomorrow. Generally, when you have a really bad day like today, the following day is a pretty significant pop up. I'm pretty positive. Like if you go back over the last couple decades, the 10 highest days or 20 highest days were always immediately after the largest drops. I'll have to pull up a study on that. I know I've read one. I'm just not probably getting it exactly correct.
It seems to make sense. Like during times of volatility, it goes one way, it slingshot back the other way.
Yeah, because like I literally just helped a client. Actually, not really a client. They're not a client. They're just a friend of mine, and her husband had passed away earlier this year, and so I was just going through their accounts over the last few weeks, making sure everything's straight for her. And even though she's in her 70s, there's these buckets of money that are like her growth buckets, right? Money that she doesn't need to live off of, and she probably won't use for 12 to 15 years or more, right? And so we had sold out. It was all heavy bonds, and so we had sold that out. And so what we actually did today is we bought in. We bought in the midst of this. Now, we did that because you said 12.2 from its high. Well, that's an automatic 12% gain at some point.
Yeah, more than 12.
Well, yeah, because it's going to take 14 to get there.
Yeah.
14, 15 to get back to zero, right? Because it takes more to get back than it takes to lose, right? And so it's kind of like, you know, for your growth money, you know, you gotta manage that a little bit differently, right?
Definitely.
And so what you were talking about with the buckets is there's different buckets of money, and one of the hard parts with the way that we manage money is in the old days, if I did bonds and stock, you would open up your account, you would see all of that. And if the stock had gone down and the bonds hadn't, well, that's going to, you know, if it was 50-50, right, and your stocks drop 10%, the bonds don't do anything, what does your overall portfolio drop?
The stocks drop 10?
Yeah, the stocks, 50-50, stocks drop 10, the bonds.
Yeah, you only lose about 5.
That's a 5% drop. It's not a 10, right? Definitely. Well, today, you guys, when you log into your accounts, all you see is what's in the market. We don't have software that ties in your annuities, your life insurance with your money in the market to show you how your overall portfolio is reacting, right? So that's just something to keep in mind that people might want to think about as they go through this. So pretty much, I would just say, you know, let's see what happens tomorrow. If you're very conservative and 8.5 or whatever, 8 to 12% drop is a concern, feel free to reach out to us. And we'll probably be doing another video tomorrow, if not next week. So this is Elliot.
Nathaniel.
Signing off.